Ladies and gentlemen, welcome back to the channel on this sunny, cold Sunday afternoon, baby. We got a lot to talk about. We got CPI that's going to be coming out this week, and we've talked about the numbers and the expectations that the markets have for these numbers, but I want to tell you guys the one big concern that I have is the markets are expecting massive deflation for the month of December, and we're going to talk about why and how and what and who and how could this happen in this video, guys. We're also going to be talking about everything you need to know regarding AMC stock to get you started off on Monday. So let's get into it. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and let's get into it. So first things first, guys, we're going to start off with inflation expectations, and I've already given you guys the rundown of kind of what to expect as far as economic data as far as what's going to be happening this week. Now, you have a couple things in the beginning of the week. Nothing's going to be as important as CPI this week. CPI is going to be the big catalyst. You do have bank earnings as well on Friday, but CPI comes out on Thursday, and that's going to dominate the market move, right? Thursday, you're going to get a big move from the CPI report. Friday, it's likely going to be a continuation from the CPI report. Mix that in with bank earnings, and the move could get bigger, more or less, right? If it's a positive reaction from CPI, if the banks have bad earnings, I doubt it's going to crash the markets. If we have a positive CPI and the banks have positive earnings, well, that could be a very good situation for the markets. Same thing to the reverse. Now, the big concern I have is the expected deflation on the month-over-month inflation rate. This is not core inflation. This is just headline inflation. And now, for a couple reasons, I have these concerns. And the big one being, commodity prices did start to go up in the month of December, and I think that is a problem. But there was a lot of sales going on in the month of December. It does seem like prices were cut for a lot of different items, and that's where people are expecting the deflation reading, and it's a pretty big deflation reading, right? We're expecting a negative 0.1% increase to inflation. So subsequently, inflation literally going down, not going up anymore, literally going down, deflation in December. Now, if you average this out, if you say every month from now until the next 12 months, we're going to see a negative 0.1% inflation reading, well, year to year or year over year expectations would be really high. That means we would see a negative inflation reading of about 1.2%. So people are expecting 2023 and 2024 inflation rates to be 3.5%, 4%, down to 2% on the lower end range, not negative 1.2%. So December could be that month of just maybe we get a lot of deflation. But if you average that out, that's a very high expectation that inflation is going to plummet. The problem is, if inflation comes in at 0%, it's not good enough. Markets are expecting deflation. If inflation comes in at 0.1% of an actual gain, that's obviously not good enough because people are expecting deflation for December, and that's the big problem. It's not like we're coming in expecting December's month-over-month inflation reading to be 0.3%. We're not. We're expecting a lot already, and that's what sets you up for potentially some pain in the markets. Obviously, I'm not a financial advisor. I think this is more or less common sense depending how much you watch the CPI numbers. Now, let's run through the numbers here briefly, and then we're going to move on to something else. We're going to talk AMC here in this video as well. So all of this inflation data will come out at 8:30 in the morning, so I don't want to go over that over and over again. It's all coming out at 8:30 in the morning on Thursday, and that is Eastern Standard Time. So Inflation rate year over year. We're expecting 6.9%. Last reading was 7.1%. Core inflation rate year over year. We're expecting 5.9%. Last reading was 6%. Inflation rate month over month. We're expecting that negative 0.1%. The last month's reading was 0.1%. And I should say the consensus for last month was 0.1% as well. So the consensus estimate was actually right on last month. If it's right on this month as well, that's going to be a very positive thing, right? If we're expecting deflation and we get deflation, that's going to be good. Now, the core inflation rate month over month, we are expecting 0.1%. Last month's expectation, so for the month of November, we were expecting the core inflation rate month over month to come in at 0.3%. It came in at 0.2%. So it was actually a beat last month, and we're expecting another 100% beat in this month, leading that core inflation rate month over month down to 0.1%. You are also going to get initial jobless claims for January 7th and continuing jobless claims that will also come out at 8:30 in the morning. So you're going to get data overload on Thursday at 8:30 in the morning, and you're going to see a very violent move in the markets. The last couple CPI reports we've gotten, the stock market has moved 2 to 3% before you could even make a trade on the markets, before the markets even open, guys. So keep that in mind. All of this is going to be super important, but we do have some leeway Monday, Tuesday, and Wednesday because we don't have a lot of economic data that is going to come out that is going to move the market. So there is that. As far as earnings, if you guys did not watch the last video, you're not really going to have too much for the beginning of the week on Monday. Tilray, WD-40, Jeffries, that's about it. On Tuesday, you're going to have Bed Bath & Beyond, pretty much about it. And then on Friday, you're going to have Bank of America, United Health Corporation, JP Morgan, Citi, Wells Fargo, Delta Airlines, BNY Mellon, BlackRock, and First Republic Bank. And Bank of America and JP Morgan, those are the two largest banks by market cap. So depending on what they have to say, that's going to be a big one, guys. And that's definitely what you want to pay attention to on Friday. But I think just CPI overall, it's probably going to dominate the market move on Friday as well, unless the banks give us something really surprising, unless we get a glimpse of like a credit crisis or, you know, profitability really dropping on these banks. I don't really expect that. So I think CPI is really going to dominate this next upcoming week. Now, we take a look at AMC and take a look at the data here. As far as option activity, last week was rough. 1% positive order value, 120 orders, totaling $54.55 million. So it was rough last week for option activity. And like I've said many times, I do think you're seeing these deep in the money puts that are being bought by institutions to hide their short interest, because typically you're not going to see someone trying to squeeze out another $1 or $2 of AMC to push this thing really down into ultra penny stock territory, right? Just to what, make $100 per option? Doesn't make a lot of sense. And you're seeing some very big options as well for these trades. So for January 20th, a $15 put, $4.09 million, 3,600 options that were placed. So if you times that by 100, you're looking at about 365,000 potentially sold short shares that they're trying to cover up just on that one option trade. And that's only my opinion. I'm obviously not a financial advisor. I don't know if this is exactly what is happening, but you have not seen this before in the history of AMC, besides when they were trying to cover up on their short positions back there before the June rally, right? You've seen a lot of this going on. You see people trying to buy deep in the money puts to report that they have actually covered on their short positions. And you're seeing these trades, they're not in the thousands of dollars. They're in the millions of dollars. And they're pretty short, right? They don't have a lot of time to expiration. January, March, February. You take a look. January, March. For all of these deep in the money puts, Like, that's not a lot of time. It's not a lot of time to give your trade that you're spending millions of dollars on to actually come to fruition. And they're doing this because they don't care what happens with this $4 million. They're trying to cover up a larger short position, which is the real problem here, especially as the stock heads to its 52-week low. They don't want you to know the actual short interest numbers. And from what we can see right now, they have been climbing exponentially over the past couple of days and weeks. So the live short interest of free float is almost at 22%. It went up 1% on Friday alone. The amount of shares that are currently sold short went up 1.11 million shares on Friday, now sitting at 112.01 million shares, and the actual live short interest of free float sits at 21.73%. Cost to borrow rates are extremely high as well, and that's probably a big part of why they're trying to cover up on their short positions. Because if the short interest all of a sudden came out that it's 35 or 40%, the cost of borrow rates would jump up exponentially. It would not surprise me to see 1,000% cost of borrow rates again on AMC, because that would make the stock very risky, right, to sell short. That would make all of those short positions become very, very risky. And they're already risky, but it would make them become more risky. Now, if you take a look at Interactive Brokers short availability, you can see about 650,000 shares available to be sold short with a 98% cost to borrow rate. Cost to borrow max 268.03%, cost to borrow minimum of 112.39%, and cost to borrow average of 236.55%. So extremely high numbers. And if we take a look at AMC to give you guys somewhat of a price prediction for this week, or just more or less where the stock could go if this week is brutal, you want to watch that 360 level. If you break under 360, 350 is definitely in the cards. Now, I don't necessarily expect that to happen, but there is some negative things that could be happening this week, like I said, with the CPI report, that could push us down to 350. If things got really bad, if the markets just cratered like 5 to 10% in this next week, you could drop to about $3 per share. That would be my lowest end range for where AMC could go. Even 336 would be the low that we set after the January 2021 rally. And that's where I'm going to go ahead and put this line, because that's really where I think some of the pain would stop at. The bottoming process, I think, would come back into fruition. And even what happened that time, right? You set yourself up at these levels for a big rally to the upside, come down a little bit, and then the actual short squeeze that happened in June. So I do think if you continue to drop, it would be a really good opportunity nonetheless, but you're already close enough that I think right now is a very big buying opportunity. Now, to an upside move, if we were to get a positive week, and don't hold your breath for it, right? Now, AMC can do its own thing. It doesn't have to see a positive market to actually rally, but let's just say things are good. Then I do think you could target that, you know, what is it, $7 range, $6 to $7 range in this area where you first started to really sell off after the November rally, guys. So that is going to do it for this video. I don't want to make this video like 30 minutes long. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.